Good afternoon, traders. This is Taylor from the tradinganalyst.com. Thanks for stopping by. We're going to run through a bunch of charts here. But first, if you're not already a member or haven't joined the site before, you can go over to the homepage here and join our free chat room. You can either sign up here at the free chat room tab or on the free chat room tab here. And all you need is an email address and to create a password, and you are into the free chat room. Email address, password, type it again, go, and you are into the free chat room. No strings attached. We run a open environment, community environment. We want to, share as much as we can, and highly suggest that you take advantage of it. So let's run through some charts here. First, I'm going to go through a couple individual names: Facebook, Apple, Amazon. Then I'm going to go over the S&P 500, go over how it compares to the 2008-2009 chart. I'm going to go over the VIX, oil, gold, emerging markets, and bonds. Okay. So first, we're going to cover Facebook. Nice breakout here, but a couple things that have me concerned. So I do think that Facebook, obviously, this is a nice breakout, all-time highs, good earnings, over resistance, good volume, everything is looking good. Okay. Another thing that I want to point out is that we are outside of these upper Bollinger Bands. Okay, and I have the extra wide settings on my Bollinger Bands, so this is an even bigger signal right here. Okay, we are outside of the Bollinger Bands, and I just want to point out two other times in recent history that we were outside of the Bollinger Bands. So here's today, here's the last time over here, and here's the last time over here. Okay, so short term, every time that Facebook goes out of these Bollinger Bands, it sees some consolidation. Okay, so that's good for people that are not already in it. Okay, we can use this 108 as support. Okay, if Facebook is above 108, it's bullish. All right, if it's below 108, I'm not going to say that it's bearish. Obviously, it's not bearish. We've got a really strong looking chart. But as far as the risk reward, as far as short-term trading, I would not like it long personally if it was below 108. Okay, but I do think that we can use this 108 as a level of support. Probably going to see some kind of consolidation next week. Maybe we'll have another gap up, and then we'll see some kind of a doji, and then it'll come back down and tag this 108 support, which you can use to trade against long. So I do like Facebook breaking out to new all-time highs, but just be aware of what it's done in the past when it's broken out to new all-time highs. New all-time highs over here, and then it's seen some consolidation at the very least. Okay, so as you can see, here we saw some consolidation and then it went higher, but over here we saw some consolidation and then it went lower. Same thing over here, all-time highs, okay, some consolidation and it went lower. Okay, so when you're using technical analysis, you look for patterns. Okay, I repeat, I am not saying that Facebook is going to go down or that I like Facebook as a short. I'm just saying that you need to be aware of what it's done in the past, and you can use this 108 as a support, a reference for whether or not Facebook is going higher or lower in the near term. Okay, simple as that. Next, we're going to cover Apple. Okay, so Apple, definitely like this support down here at 94. I like that it closed into this gap right here. It closed above the high of the earnings gap down, so that's bullish right there. Obviously, overall, we don't have a good looking chart for Apple, but I do think that it can get a bounce here, and you can use this 94 level as support. The low of this candle right here, the low of this candle right here, the open of this candle, and almost near the low of this candle right here. So about this level right here, 93, 94 is the level that's going to be kind of the make or break for me of whether I like Apple long. Okay. As far as this gap here, we closed at the high of the day, or almost the high of the day, on a really strong candle above the highs of the previous day, or not the previous day, but the previous 2 days here, and we're inside this gap, okay? And the gap is right at about 100. So I think that it's safe to say that Apple's going to, at the very least, hit this 100 gap. Obviously, there's a lot of resistance in the way to break it above 100. We've got the middle Bollinger Band here, this dotted gray line here, and that's at about 99. And we've got the lows of this candle, highs of these candles, and a lot of trading between these two candles in that 100 range. But I do think that Apple is forming somewhat of a bottom here, and I do think it can come back up here and tag, 108, 110, maybe 112. Do I really want to be pushing it up to that level long? No, definitely not. The chart is definitely in trouble, and my preferred trade is to wait for it to potentially pop up to these levels up here, in which case I really do like it short, and I do think that Apple long term is coming down. Okay, I'll look at the weekly chart. Sorry, my throat is bothering me. So weekly chart here, we held this key support. Okay, got the lows of these candles right here. This is the weekly chart. Highs of these candles. That was the high over here. That was a low over here from the August crash over here. And it's just getting a bit oversold over here. So I do think that short term we can see a bounce in Apple. But again, we've got this downtrend line that's been valid since when was that? The summer or even the fall of 2015. So about 9 months now that we've had this downtrend line be in place on the weekly. It's a lot harder to see on the daily chart when you're only looking at a year time frame, but when you look at the weekly chart, you can see we've been in a downtrend, okay? We've got a lower low, we've got a lower high, okay? And we're going to make another lower high up here in the 110 to 112 range, potentially, okay? And I really do like Apple short once it makes its way up to that range, okay? But it looks like we are forming some kind of a bottom here on that weekly time frame, and it's just been a massive decline, and I think it's due for a little bit of a bounce here. So keep your eye on that. Obviously, we got to have the market on our side. But yeah, so those are my levels. Next, I'm going to be covering Amazon. Okay, Amazon. It bounced right at the uptrend line that it had right here. Several touches. 1, 2, 3, 4, almost 5, 6, 7, 8. And then 9 and 10 right here. So definitely a nice uptrend line to work with up here. It was a nice bounce from earnings, gap down below that trend line, but ended up closing above it. Okay. Keep in mind we've got this gap to fill up here from the day before earnings. The close of this candle looks like that's about 639. Close is 635.35. So that's a gap that may want to fill, but again, heavy resistance at this 640 mark. I didn't draw this line after earnings. I've had that line there, so it's not really that surprising that it got rejected there for earnings. But you never know. So we've got this uptrend line that you can use to trade against long. But again, we've got resistance up here, especially with the the earnings reaction. It wasn't horrible, but it wasn't good. So just kind of keep that in mind. I'm not saying that Amazon's going to break this trend line, but I am saying it might be wise to be cautious if and when it makes its way back up to this 640 mark, because as you can see, it's an important level. Bounced here, and then this was the key breakdown moment over here, and it dropped several percentages lower, and then it got rejected again up there before. So 640, that's my level. That's a key level. If it breaks over that, I think we can head higher, at least fill this gap up here. Next level of heavy resistance is at 680. Do I think it's going up there? I don't. But again, 640 is the level. If it breaks over that, 680 is the next level. Okay. Longs, you want it to hold this uptrend line for higher prices. Okay. Next support's lower. If it breaks that, we've got some nice support in the between this 500 to 540 mark. Just a lot of trading in this range. I think there's a lot of support there. As you can see, the volume by price bar is thick there. And even better support is down here in the 450 to 420 range. As you can see, we're trading in a box right here. And as you can see, it's the longest volume by price bar on this time frame chart. Okay. Next, I'm going to look at the S&P 500. Okay, so S&P 500. We've got this support to work against right around 185 or so. Okay, lows over here, right here, and moving forward though a little bit higher, more relevant supports for the short-term trading. Nearest term support I see is right around 190. As you can see, the low of this candle, the high of this candle, the highs of a lot of these candles, and it was the low of Friday's candle. Okay, so we can use that as a support. Below that is about 187 is a support that I see. The lows of these candles right here, highs of these candles, lows of these candles right there. Okay, heading higher for some resistances. The main resistances I see are about 196, first resistance. The main resistance that I doubt that we're going to be breaking over is about the 200 mark. Above that, 204. We've got this downtrend line. It only has 2 touches, so not that strong of a downtrend line. Really needs 3 touches in order to be considered a valid trend line, but it is angling down, and it will match up with these Fibonacci retracement levels. Okay, so the Fibonacci retracement levels I drew from the high over here, about 210, to the low over here at 181, and that gives us golden ratio, 61.8% Fibonacci retracement level of 199, and that matches up perfectly with this what was formerly support, and now it's resistance. We had a touch here, 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 here. Over here was the lows. Over here is where it capped us before, and that was the breakout point to head it higher. So this 200 level, definitely a key level for the S&P 500. We've got the upper Bollinger Band here. It's this line right there, and it is screaming downward. By the time that the S&P 500 makes its way back up there, the upper Bollinger Band will likely be down there near 200 as well. So very, very cautious of the S&P 500 at this 200 mark. I highly, highly doubt that it breaks over that. We've got a lot of damage. If you look at the entire market like I do, I follow 700, 800 charts. that I look at on a weekly basis on the daily time frames, weekly time frames, monthly time frames. So under the surface, outside of just this index right here, the S&P 500, it's not looking great, and there are a lot of implications that we are heading lower long term. Okay, which brings me to my next point. It doesn't happen overnight. Okay, this is the S&P 500 weekly chart. As you can see, this is 2007 right here, 2008, and 2009. Okay, and the reason I'm showing you this is because we like to follow. When you're a technician in the market, you look for patterns. Okay, you can say whatever you want to say about the that this isn't like 2008 or whatever. It doesn't matter. Okay, the housing crisis, it's different this time. The oil crisis isn't as bad. I don't care. It doesn't matter. Okay, the point is that we look for patterns, and we look for those patterns to repeat. Okay, so right here, we're, in my opinion, we're right about here on the weekly chart for the S&P 500, and as you can see, it heads higher. Okay, so this is like the low that we made in August and September. Okay, and this is the low that we made in January. Okay, and this is all just guessing. Not guessing, but I'm using my best judgment here to kind of look for patterns in the market. Okay, and so this is our January low, and as you can see, we head higher, and then we get rejected at the lows over here, right there. Okay, so that is what I consider what is equal to about the 200 level on the current S&P 500 chart. Okay, and if you look at the Fibonacci retracement levels, it's about the same, a very similar looking chart right here. Okay, so long term, doesn't look good. Okay, and in my opinion, the worst has not come yet. Okay, now keep in mind, I'm not saying that the S&P 500 currently is going to follow exactly like 2008 did. Okay, I'm just kind of pointing out that just because we bounced here, okay, currently, that does not mean that we're out of the woods yet. It means that we're out of the woods for today, for tomorrow, for next week. But just know that we don't go straight down and we don't go straight up. Okay, the market moves in waves. Okay, so you need to understand how the market moves, how charts move, and you need to understand what kind of market we're in. We're in the very least at a choppy market. Okay, so the highs can get sold into, and the lows can, at least currently, be bought. Okay, but I can imagine that if we head down to these lows down here again, it's not going to be pretty, and I think they're going to break. Okay, we may make another low and then head back up to 2,000. But if we hit 200, then I think that the next time it hits down here, it's going to break. Okay, those are just my opinions right now. So we'll see how it plays out. It's good to compare other charts that have happened in the past. Okay, so I'll get off my soapbox. Next, we're going to look at the VIX here. All right, so we've got an uptrend line on the VIX that started in August right here. Really clean looking chart right here. Okay, the VIX is one that I like to throw out kind of just a word of caution, I guess. It's not the easiest thing to chart, but most of the time, TA works well with it, and it's the best thing that we have, the best tool that we have available to navigate the VIX, really. So we like to use it. So I just like to throw out that little disclaimer that it's doesn't always follow the same rules as everything else. Okay, so but we do have this uptrend line. Once we get down to about 17, that's also the lower Bollinger Band. As you can see, it lines up perfectly right there. The lower Bollinger Band is at 16.79 right now. I would say that when VIX makes its way down to that range right there, it might be a good time to start looking for some shorts in the market, as I do think that the VIX will bounce from there, and we know how the VIX trades with the market. Okay, so next I'm going to cover oil. We'll look at crude right here. Couple things. Okay, so we've got this slower moving downtrend line right here. Okay, and then we've got this faster moving downtrend line right here. We've got 1, 2, 3, 4, 5, 6 touches right here. Okay, technically we did close above the downtrend line here, but as you can see, look at the candles that we're forming right here. We've got a longer upper wick on Thursday, and then Friday we saw a indecision candle right here, right at the trend line. Okay, technically it's over the trend line, but if you know trend lines, you know that they can, when it's a candle just like that, I'm not going to consider that a break over it. I want to see another candle close above this trend line and a stronger looking candle before I really consider this a break of that trend line. Okay, I do think that if oil comes back down to about 30, that's going to be a buying opportunity. I do think eventually this downtrend line is going to break. I just don't know if it's going to be a straight line up there. But I do think that this 30 level on WTIC crude is going to be a buying opportunity moving forward. If it comes back up to this downtrend line, I do think it's going to get rejected. We have to follow trend lines, okay? And oil is in a downtrend, and this move right here, until proven otherwise, is a counter trend move. So play accordingly and just be aware of the situation. I'm going to look at the USO chart here, just to for those USO players to kind of see same kind of thing. Downtrend line up here, slower moving, faster moving downtrend line, pretty much the same chart. And I do think that the high 8s, potentially low 9s is a buying opportunity down here. There's a gap fill right there. I do think it breaks over this downtrend line. Same thing as crude, just different numbers here. Okay, there is going to be some resistance right around here, about 1075. If we break over that, we're going to come up here and we're going to tag this downtrend line. And once that happens, I do think it'll be coming down from there. Follow the trend. All right, next we're going to be covering dust. All right, so dust, it likes to bounce from these areas down here in the 12 to 11 range down here. I do think that if it makes its way down there, it's a buying opportunity for dust. This is the gold miners bear, so when dust goes up, gold miners go down. Okay, so what we have here is we've got somewhat of a channel right here following this line. Both of them are parallel, and right here, as you can see how we're making lower lows, lower lows, lower lows, lower lows, but over here we made the same low, and then we made a higher low right here. Okay, so that's why I drew this new uptrend line right there. All right, and I do think that the low 13s to mid 12s is a buying opportunity for dust, and I do think that longer term we end up tagging this upper trend line up there. So it just moves in waves. Okay, moves in waves. Look at that. All right. Okay, and as you can see, it has a long wave, shorter wave, longer wave, shorter wave, longer wave, shorter wave, and then what do we have right here that's going to be next? Most likely, a longer wave. All right. Obviously, got a long ways to go. Hard to make any predictions, but we're just going to follow this pattern. I do think that dust heads much higher from here. So we'll see how that works out. All right. Next, we're going to covering emerging markets. So we've got some resistance up here at about 31. Okay, lows right here, here, here. Barely closed. Just below that resistance, but it ended up bouncing. So we're just going to count that as a low right there. But longer term, this is an 11-month chart. As you can see here, let me see so you can see the times down here. We've got a downtrend line since April of 2015. So almost a year-long downtrend line, and that's going to be a hard level to crack above this downtrend line. If you're a trend follower, this is a great area to get short, right around 32. If it ends up, going straight up, by the time it makes its way up there, maybe it'll get rejected at 31, come back down, and by the time it makes its way back up again, the downtrend line will be back at 31, and that'll be the place to get short. So I like this downtrend line. Follow the trend. The trend is your friend. Last but not least, we're going to cover TLT. TLT is a favorite one of mine. I do think that TLT, I've been harping on this. I think that TLT is headed higher. I've been thinking that it's going to consolidate lower before heading higher. But again, it's not giving you that opportunity just yet. But if it does, I do think that's definitely a buying opportunity in the 122 range if it makes its way down there. We've got this uptrend line that's been valid for 5 years. Touch here, 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 and this is the slower moving uptrend line. And then we've got a trend line that's been valid since late 2013. Touch here, grind it up against it here, 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 here. Okay, so it really likes that angle. And then it has this downtrend line that it broke over here. So this is a big bull flag right here. Here's the pole, okay? And then here's the flag that it broke over, okay? Another thing that I want to mention here is we've got the weekly, this is the weekly chart, okay? And we've got the Bollinger Bands squeezing hard, okay? They squeezed hard, and now they're expanding up in the direction of price, okay? What happens when that happens, when you have a weekly Bollinger Band squeeze, the move can be parabolic, okay? I'm going to show you another time the weekly Bollinger Bands were tight, just like over here, okay? And as you can see, the Bollinger Bands were tight, and the reason that Bollinger Bands get tight is because price trades in a tight range. So when price breaks out of that tight range, like it was here for a while, just like it was over here, even a longer time being in that tight range and a tighter Bollinger Bands here, as you can see, the move out of this tight range can be parabolic, okay? So do not be surprised if TLT not only hits 135 but breaks higher than that, okay? You can use this uptrend line as a level to trade against if it'll give you an opportunity to get in. Who knows if it will? It may just go straight up, kind of like it did over here, okay? But again, I do think it's heading higher. Weekly squeeze on the Bollinger Bands, and price is trading in the upward direction, okay? That's it for the analysis. Again, you can join us for our free chat room. Yes, it's free, no strings attached. Go to the home page, free chat room. All you need is an email and to create a password, and then you can join us in the free chat room. Email, password, password again, and you're in. Simple as that. We want to create a free and open environment where traders can trade ideas and navigate this market together. It's a great opportunity, and I suggest that you join us. Have a great afternoon, and I'll see you all next time.